Hello friends, welcome to this session on the Get Set Go series. Today's session will be concentrating on the issue of debentures when there is a purchase of a business. Now, we are going to be talking exclusively on purchase of a business by a company. Now, when there is a purchase of business, there is assets and liabilities of that particular other company which is being purchased. So assets and liabilities of another company is going to become assets and liabilities of the existing company which is going to purchase it. And in return for those assets and liabilities which is being taken over, here we are going to be seeing when the purchase consideration that is being paid, that is the amount that is being paid to acquire these assets and liabilities, that is called as purchase consideration, that is being discharged by issue of debentures of the company which is making the purchase. So that is what we're going to see in this particular session. Now, important terms, as I told you, is the purchase consideration. One, that is the amount which is being paid for the purpose of purchase of the business. And the second term that you would be coming across is the net assets. Net assets is nothing but all the assets that are taken over at their agreed values less the liabilities, if any, have been taken over of that business at the agreed value. That would give you net asset. Once you know these two terms properly, then the next step would be comparing the purchase consideration and net asset. Now, in a purchase of a business, there are three different situations that you might encounter. The first situation is where the purchase consideration which is being paid to acquire a business is equal to the net asset. Suppose the purchase consideration being paid is 6 lakhs and the value of the net asset is also 6 lakh. That is the situation we are talking about. There, under such circumstance, the journal entry that would be passed is as follows. You would debit all the individual assets individually at the agreed value. You would credit the liabilities taken over at the agreed value, and you would credit the vendor with the purchase consideration which is payable to that particular company which is being purchased, or business which is being purchased. This would be the simple journal entry that is to be passed. The second situation that you might encounter is where the purchase consideration being paid is more than the net asset. Suppose we take the same purchase consideration of 6 lakh being paid, but suppose the net asset which you calculate comes to 5.5 lakh, that is 5 lakh 50,000. Now, more is being paid to acquire 5.5 lakh worth of assets. When would you pay more? What is that extra amount you're paying for? That extra amount you're paying for is the goodwill of that particular business. So in this case, the extra 50,000 which is being paid over and above the value of the net asset is the goodwill. So the journal entry that you would pass under such circumstance is, you would debit the individual assets taken over at the agreed value. You would debit the goodwill account with the difference in the purchase consideration, the net asset. You would credit the individual liabilities at the agreed value, and you would credit the vendor with the purchase consideration which is to be paid to that particular vendor company. Third situation that you might encounter is where the purchase consideration is less than the net asset. Like we'll take the purchase consideration as 6 lakh, but if the net asset which you calculate is 6 lakh 20,000, then under such circumstances you are paying lesser amount than the value of the net asset. That lesser amount is actually in the nature of capital profit earned by the purchase of a business by the purchasing company. That 20,000. So that capital profit, whatever is being made, would be credited to capital reserve account. So the journal entry that we would be passing would be sundry assets account debit. Individually, all the assets would be debited with the agreed value. You'd credit the sundry liabilities individually with the agreed value. To the vendor account, you would be putting in the purchase consideration which has been agreed upon, which is in this example 6 lakhs. And you'll be crediting the capital reserve with the capital profit made of 20,000. So we are paying lesser than the value of assets you're taking over. It is the nature of a capital profit credited to capital reserve. So when you're paying more consideration than the net asset, it results in goodwill. And when you're paying lesser consideration than the value of net asset, it results in a capital profit to the company which is acquiring, and so capital reserve account is credited with that difference. Now with this understanding, let us now solve questions. But before that, one more important concept is to be understood. Now, on purchase of this business, money is not being paid out. There is no outflow of cash or amount from the bank. But instead of that, the vendor is going to get debentures of the company which is purchasing its business. So, the debentures are going to get issued to the vendor. Now, when these debentures are issued, there are three possibilities. Those debentures might be issued at par. Par means a face value. Suppose the face value is 100. Then it is issued at rupees 100. Then you could say that it is issued at par. Suppose it is issued at higher price, say 110 or 120. Then you're issuing at more than par value. So debentures could be issued at premium. Third situation is where the debentures might be issued at discount. That is when the debentures are issued at a price lesser than 100. So suppose it is issued at 90 or rupees 95, then 5 rupees or the 10 rupees that is being given here as discount. So these three situations also have to be considered. Now, in these situations, you will have to find out what is the number of debentures that is being issued so that you can pass the journal entries to show the settlement of the payment to vendor by issue of debentures. So for that, you need to know this particular formula. To calculate the number of debentures issued, we take the purchase consideration divided by issue price. Now what is purchase consideration? We have already discussed before. But here what you have to note is that sometimes a part of the payment being made to vendor is settled by means of payment by check or a bill of exchange. Then we have to eliminate that, and whatever is settled by issue of debentures, only that purchase consideration would be the numerator of this formula. And you will divide it by issue price. Issue price is if it is issued at par, then the par value. If it is issued at premium, then the premium value. And if it is a discount, the discounted value. So this formula is of utmost importance to calculate the number of debentures issued to the vendor in settlement of payment for purchase of the business. Now, let us start with this particular question. X Limited took over following assets and liabilities of Y Limited on 1st April 2020. Land and building was taken over at rupees 5 lakh, furniture at rupees 1 lakh, stock at 50,000, creditors at 70,000. So there are three assets taken over at these values. This is total 6,50,000, and creditors, that is liability, which has been taken over as of 70,000. The purchase consideration of 6 lakh rupees was paid by issuing 10% debentures of 100 each at a premium of 20%. So we have the purchase consideration here of 6 lakh. And how was the purchase consideration discharged? By issuing debentures, that is 10% debentures of 100 each at a premium of 20%. So it has been issued at 120. First we will do the calculations and then go to the passing of journal entry. First thing that we have to calculate is to see whether the purchase consideration is more than or less than the net asset. So first let's calculate the net assets of this particular business. Net asset is nothing but the total of the assets which have been taken over minus the liabilities which have been taken over at their agreed value. In this case, the total of land and building 5 lakh plus furniture 1 lakh plus stock 50. Total is 6,50,000. The liability taken over is 70,000. So you arrive at an amount of 5,80,000 as the value of net asset which is being taken over. But the purchase consideration which is being paid is rupees 6 lakh. So now compare the purchase consideration with the net asset. If you see here, the purchase consideration, I am using PC for short form. So purchase consideration is greater than 6 lakh, is greater than the value of the net asset. I am using the short form here, NA for net asset. So when the purchase consideration of 6 lakh is being paid to acquire the net asset worth only 5 lakh 80, the extra amount is how much? 6 lakh minus 5 lakh 80. So the formula, if you want, is goodwill is equal to the purchase consideration minus the net asset. So that comes to rupees 6 lakh minus 5 lakh 80, 20,000. This is the value of goodwill. Now, once this calculation is done, you know, in the first journal entry, when you are recording the assets and liabilities, you would have to debit goodwill account with 20,000. Moving further, the vendor has to pay off this consideration. So now we will have to calculate the number of debentures that have to be issued. So, number of debentures to be issued, you have to remember the formula. The purchase consideration which is to be settled by issue of the debentures by the issue price of the debenture. Here the purchase consideration to be settled is entire 6 lakh. There is no other mode through which it has been settled. So entirely is going to be settled by issuing the debentures, and the issue price is 100 rupees at 20% premium, that is 120. So that gives you 5,000 debentures of rupees 100 each at rupees 120. So now with these figures, now we can pass the journal entry. Now first we will record the purchase of those assets. We will record them individually. Now see, land and building 5 lakh, furniture 1 lakh, stock 50. So land and building account debit 5 lakh, furniture account debit 1 lakh, stock account debit 50,000, and remember there was a goodwill here. So goodwill would be debited, goodwill account debit 20,000. 2. Creditors account, that is a liability which has been taken over, which is 70,000. And vendor account, that is, in this case it is Y Limited. So instead of vendor, I can also write Y Limited account. 6 lakh is the consideration which is going to be paid. So this is for purchase of a business. If you see, this totals to 6 lakh 70 and this totals to 6 lakh 70, we pass the journal entry. Now we have to discharge the amount which is payable to Y Limited. So Y Limited account debit, we are going to give away 6 lakh. How? We are going to issue 5,000 debentures of 100 each. So to 10% debentures account, that is 5,000 into 100, 5 lakh. And we are issuing it at premium. So we have to credit the securities premium reserve account with the premium. So 5,000 into 20, 1 lakh. So B, purchase consideration settled. Or paid. So these are the two journal entries that would be passing. I hope that is clear. Now let's do one more question. Here, Strong Limited purchased the assets of Weak Limited for 4 lakh. So this is the amount of purchase consideration and took over liabilities of 70,000 at this is the value of the sundry assets which have been taken over and took over the liabilities of 70,000 at agreed value. This is the purchase consideration. The payment was made by issuing 10% debentures of 100 each at a discount of 10%. So 100 rupees worth has been issued at discount. So the issue price would be 100 minus 10% of 100, 90 rupees. So each debentures at 90 rupees each. So again, let's do the calculation first. First, what are we supposed to see? The net assets. Now here it has purchased assets for 4 lakh. So 4 lakh minus liability of 70,000. So that gives you net asset of 3 lakh 30,000. But what was the purchase consideration that was decided? The purchase consideration in this case is rupees 3 lakh 24,000. So now you see that purchase consideration, compare it with the net asset. When you compare, you see that you have paid only 3 lakh 24 but got asset worth 3 lakh 30. So you are getting more. That is a capital profit. So capital reserve would be the result of such a transaction. Capital reserve would be the net assets minus the purchase consideration, that is 3 lakh 30 minus 3 lakh 24,000. That is rupees 6,000 is the capital reserve. Capital profit, it will be credited to capital reserve. Now next calculation would be to calculate the number of debentures to be issued to week limited. Now what is the formula for that? You take the purchase consideration divided by the issue price. The purchase consideration here also has been discharged totally by issue of debentures. So we will take 3,24,000 divided by the issue price being issued at a discount of 10%. So 90. So what is the number of debentures that are going to be issued? That comes to 3,600. So 3,600 debentures of 100 each at rupees 90. So there is 10 rupees, that is 10 into 3,600, 36,000 is the discount on issue of the debentures. Now let us go and pass the journal entries for this. So first is the asset of 4 lakh, liability of 70, capital reserve of 6 lakh and purchase consideration of 3 lakh 24. These are the figures that will come in the first entry. So we don't know the individual assets, so we will write sundry assets account debit. This here 4 lakh. There is sundry liabilities account. That is 70,000. There is capital reserve, a capital profit of 6,000 that we calculate. And to week limited, that is the vendor, 3,24,000 is being discharged. So this is for purchase of a business. Then after this, one more entry, that is to discharge the 3,24,000 to week limited. So we debit week limited account debit 3,24,000. But the debentures were issued at a discount. So there is discount on issue of debentures account debit. That is 3,600 into 10 rupees discount. 36,000 is the amount debited to discount. 2. What is being issued? They have issued 10% debentures here. So we will write 10% debentures account. That is 3,600 into 100. So you see that always the par value goes into the debentures account. So you see the total 3,60,000 tallies with 3,60,000 here. This is for discharge of purchase consideration to week limited by issue of debentures. So this way you have seen both the situation where the purchase consideration exceeds the net asset and where the net asset exceeds the purchase consideration, and also issue of shares at premium and at discount. If it is a par, just divide the purchase consideration which is being discharged by issue of debentures by 100 rupees to get the number of debentures, and you just debit the vendor account and credit the debentures account. It's as simple as that. So Now here you have a self-assessment question. Try this question without taking any help from any outside source to see your level of understanding. Sun Limited took over assets of 66 lakh and liabilities of 8 lakhs of Star Limited for rupees 60 lakh. Give the necessary journal entries in the books of Sun Limited if there are two cases. First case, where the purchase consideration was payable 10% in cash and balance in 54,000, 12% debentures of rupees 100 each. And second case 2, where the purchase consideration was payable 10% in cash and balance in 45,000, 12% debentures of 100 each issued at 20% premium. So number of debentures that are going to be issued has been given. One is at par, other one is issued at premium. And here this is the value of assets, liability taken over, and this is the purchase consideration. So I hope this video was helpful to you. So if you found this video useful, please do like and share it. And if you have not yet subscribed to this channel, then please do subscribe to the channel to get continued notification of the upcoming videos. And the solution to the self-assessment question, I'll post it tomorrow. So thank you. Have a great day.